This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The United States on Monday imposed sanctions on Chinese and other firms it said helped to sell tens of millions of dollars in Iranian oil and petrochemical products to East Asia as it seeks to raise pressure on Tehran to curb its nuclear program. The U.S. Treasury and the U.S. State Departments imposed sanctions on a total of 6 companies, 4 based in Hong Kong, 1 in Singapore, and 1 in the United Arab Emirates, UAE, in actions that were announced in separate statements. The Treasury accused Persian Gulf Petrochemical Industry Commercial Company, one of Iran's largest petrochemical brokers, of using the firms to facilitate the sale of Iranian petroleum and petrochemical products to East Asia.
Oil rose on Tuesday ahead of a meeting of OPEC Plus producers this week that may not lead to a further boost in crude supply, although concern about a possible global recession limited gains. The Organization of the Petroleum Exporting Countries and Allies, including Russia, known as OPEC Plus, meet on Wednesday. 2 of 8 sources said a modest output hike would be discussed, while the rest said a boost was unlikely. Brent crude was up 84 cents, or 0.8%, to $100.87 a barrel at 1340 GMT, while U.S. West Texas Intermediate crude added 55 cents, or 0.6%, to $94.44.
Moving on to the top news in the energy sector.
India has eased coal import targets for utilities, according to a notice from the Power Ministry reviewed by Reuters, setting aside a target for them to import 10% of their coal needs and marking yet another reversal in energy policy. State government-run utilities and private power producers should instead decide by themselves how much coal they need to import, according to the notice, which was sent to government officials and private utilities on August 1. It has been decided that now onwards, states, independent power producers and Ministry of Coal may decide the blending percentage after assessing the availability of domestic coal supplies, the Power Ministry said.
OPEC Plus sees this year's oil market as slightly less supplied than previously thought, a day ahead of a meeting at which the producer group is set to decide on its production policy for next month. New data showed that the OPEC Plus Joint Technical Committee, JTC, meeting on Tuesday, trimmed its forecast for a surplus in the oil market this year by 200,000 barrels per day, BPD, to 800,000 barrels of oil per day, 3 OPEC Plus delegates told Reuters. The JTC is meeting ahead of a ministerial meeting of the Organization of the Petroleum Exporting Countries and Allies led by Russia, known as OPEC Plus, on Wednesday.
Next, we have the top news in metal markets.
Copper fell on Tuesday alongside global equities and oil prices as tensions between China and the United States and a run of weak economic data pushed investors to safer assets. Benchmark copper on the London Metal Exchange, LME, was down 0.2% at $7,803 a ton in official trading, having fallen as low as $7,665. Prices of the metal used in power and construction have risen from a 20-month low of $6,955 on July 15, but are down 20% this year due to a global economic downturn.
Gold prices rose on Tuesday as a retreat in U.S. Treasury yields and growing recession fears offset headwinds from a slightly firmer dollar. Spot gold was up 0.4% at $1,778.81 per ounce by 12:14 GMT, after hitting its highest since July 5 at $1,780.39 earlier in the session. U.S. gold futures also gained 0.4% to $1,795.50. Falling U.S. real rates have supported gold in recent days, and the next data point important for the metal is U.S. payrolls due on Friday, UBS analyst Giovanni Stanovo said. However, further interest rate hikes by the U.S. Federal Reserve and declining inflation should weigh on prices over the next 6 months, Stanovo said. We will now look at the top news in the agricultural sector. Malaysian palm oil futures on Tuesday slumped by more than 5% for a second consecutive session, as Indonesia lowered its export tax reference price and raised its overseas volumes quota. palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange ended down 219 ringgit, or 5.39%, at 3,841 ringgit, $862.56, a ton. Indonesia has lowered its crude palm oil reference price to $872.27 per ton, effective August 1 to 15, Senior Economic Ministry official Mustalifa Mahmud said. This would reduce its export duty, making it attractive compared to rival Malaysian palm oil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.